Picture this, you stroll into that beautiful sales center of that pre-construction gallery downtown Toronto. Your light fixtures, they're blasting you the moment you walk in. You got floor-to-ceiling renderings of what that building might potentially look like. It's a bright future potentially for you if you're looking to buy in one of these buildings. Yet there's nobody in there, there's no salespeople that approach you as you come in, and there's no coffee. And that's a real big sign of what is happening in this real estate market. Everything is eerily quiet. The silence right now might seem like you're in the middle of a video game glitch or the loading screen is on your computer, but the housing market right now is in a little bit of a free fall. Now in this video here, we are going to unpack how we actually got here, why you should care, of course, and whether you're hunting for your first home or you're just running a small business, what the market reset actually means for us, for our economy, and for the communities that we actually live in right now. You might think, I'm not buying a condo. Why does any of this actually matter at all to me? Real estate isn't just the shiny new towers that are coming up all across the big cities in Canada. It's 12% of Canada's GDP. And that's a major slice of tax revenue. Think about billions of dollars that are actually flowing into healthcare, schools, roads. It's the barista at your local coffee shop who relies on construction. You know, the crews are going to be coming in that front door to grab a cup of coffee as they do their work. The interior designer whose projects vanish when the developer actually pulls the plug, which we have seen quite so many times. So when the new home sales actually crater, the ripple effect is felt all across the GTA and all across the country. For sale signs are popping up everywhere. Every single household is going to feel something like this. Every service provider and every city budget across the country. Now I'm going to give you an example right now. You're an architectural freelancer. You're doing renderings in Toronto. In 2021, you're booking projects that are 6 months out. Today, you're sending your resume to retail stores because $5,000 a render gigs, they've disappeared. Buildings aren't going up nearly as quickly. Developers, they're not answering your phone call. Now, my name is Mike Carpino. I've been in the real estate industry for over 10 years now, servicing the GTA. Now, things in the GTA, they've been rocky as of late. You're seeing a lot of down talk in the condo market. You're seeing houses just sitting there with for sale signs on their lawns. And this is just giving you the signs that we're in a little bit of a different market than we've been in quite some time. Now, when I first got into the industry back in 2015, it was the beginning of some of the bidding wars, then it tapered off, and then we of course hit 2021 where things went a little bit crazy, but now we're definitely in a little bit of a downturn. In the last month, I walked into a developer in downtown Presentation Center only to find that the sales team, they'd actually been laid off the day before. They literally had nobody in there to help out. You've got one staff member in there to answer your questions, and that's a real big sign for us that jobs are being lost, but also that developments are just not going to be happening as frequently as we've seen them in the past. Let's look at the rolling 12-month total of pre-construction sales in the GTA right now to give us some proof to back up that data. You're going to see peaks above 35,000 units in 2017, and in 2022, the nosedive. 5,000 in early 2025. That's a level that was last seen in 1995. So we're talking 30 years ago when Toronto population was only 4.2 million people, not 6.5 million people that we actually have today. So we've added nearly 2.3 million people, yet nearly zero pre-sales are happening. The demand has completely vanished right now. Now with 50% more people, I'd probably expect more demand, stronger demand at least than what we're seeing. Instead right now there's zero. It's evaporated, it's gone. The gap is going to tell you something dramatic. It's going to tell you that we are shifting significantly from where we were. Now on this chart right here, this is that crystal ball for the construction sector. Tens of thousands of jobs from iron workers, on-site baristas, they are on the chopping block right now. Now, of course, Toronto, across Canada, that's the largest story, but it's not the only one. Pre-sales are down 86% in Toronto. 84% Kitchener-Waterloo, 81% in Hamilton, 70% in Ottawa, and 50 to 60% in the Vancouver, Montreal, Edmonton, Calgary markets. Every single major market is in a multi-decade low right now, even though urban populations continue to grow. Now, we've seen the numbers. The job losses are happening. Jobs are not easy to come by. If you have no job and you're looking for a job, it's going to take you a lot longer than you might have ever imagined to get back out there. 3 years ago, we had sub 1% mortgage rates. Pre-sales they didn't even want to deal with us as realtors because people were coming in there and they were just buying everything up. Today, we have 5% rates. The carrying costs, they've exploded, and cash flow math is gone. There's no return on your condo investment right now. If anything, you're losing money by investing in a condo. You're not going to cover it with the rent that you're going to get with a tenant. Let's say your mortgage is $2,500. You're going to maybe rent it for $2,000 at most. In some cases, you're running $500 a month loss, plus maintenance fees, plus your property taxes, plus your utilities in some cases. So investing is becoming a lot less attractive for a lot of the people who are considering doing it or were considering doing it in the GTA, which is why it's a ghost town for investors right now. Now, of course, the condo prices, they took off 30 to 50% during 2020 to 2022. But by the time the buildings are starting to close, a lot of these units are trading 20 to 25% below the contract price. And that's leaving investors underwater. And I don't think it's gonna attract anybody to get into pre-construction anytime soon. I'm getting a lot of calls from people who just can't close on their pre-construction projects right now. And I don't know how long it's going to take for people to get this out of their heads, because this is a scary thing. You buy something for $600, it's worth $500 on closing. You haven't even seen your unit and you've already lost $100,000 in some cases. Plus you got to pay all the additional closing fees, development charges, land transfer tax. It's something that's going to deter people from getting into new developments for quite some time, unless the builders start to make their projects more affordable than the current resale units. And then people might dive in and take the risk, at least, to getting into the real estate market again on the pre-construction side of things. Not only that, the material costs right now, they've jumped 20 to 30%. Labor rates have also climbed. On top of that, municipal development charges have rose by almost double-digit percentages here. The result, developers can't build affordably. Many projects simply don't happen. The money doesn't make sense for them to continue with it. And what happens here is you've got the mismatch of what it's going to cost versus the builders making any money. And then maybe they just don't go ahead with the project. Now, the pre-sales cater to investors usually who are willing to wait 3, 5, 7 years sometimes in Toronto. End users want keys in months, which is why I always push residential resale, not pre-sale. But investors' appetite, it's evaporated. So who's buying these new condos? The bridge between today's prices and tomorrow's delivery is gone. We're still going to be waiting a long time, but the uncertainty of our market is extremely scary for a lot of people. Now, every month of a delay now carries 5% financing penalty, permitting that the process took 3 months, it now stretches to 9. In a high rate environment, the extra half a year can just kill a project even before it starts. Developers might have their financing in check and they're not able to do anything, and they've already paid a ton of interest just holding that piece of land. And that's where we see ground not being cracked and developers just having to say, and the project is canceled. Now, of course, this has been happening for a long time, so I want to use a situation that we were seeing quite often in these new developments. You're seeing VR sales centers where you're able to put on your VR headset, walk yourself through your new unit, get a sense of what that's going to look like beforehand instead of just looking at a paper. Jobs like that are completely gone in the real estate industry, along with most of the pre-construction salespeople, because you can't have 10 people standing around if nobody's walking through the door. Now, according to the Altus Group, the crazy stat here is they're estimating 536,000 total jobs in new home construction, and up to 170,000, or 1 in 3, are actually at risk right now because of the lack of interest in new build properties. These are numbers, but the people that are really going to be affected and the families that are really going to be affected is what I'm mostly concerned about. I don't want you to go and buy pre-construction necessarily, but the problem is if nobody is doing it, all the people who work in these sectors are going to have a very difficult time continuing to work and find work to support their families. Now, when construction slows down, of course, governments, they're going to feel it too. Real estate construction generates roughly $60 billion in Canadian tax revenue every single year, just in the GTA alone. Now, lost development charges, land transfer taxes, municipal fees, that usually totals somewhere around $6.6 billion this year alone, and that omits things like your secondary effects, the lost income tax contributions from higher EI payouts, reduced consumer spending as well. So imagine a municipality that banks on 200 million each year in development fees, for example. Now, suddenly missing this influx from new development fees, the projects stall. The budget balance is no longer there at all. And taxpayers face cuts, of course, of higher rates elsewhere to balance it out. Every challenge, of course, fosters new solutions. So here's what we're actually seeing where you can watch for some changes to be happening. We need to reduce some of the red tape here, fast track some of these approvals so you can get some purpose-built rentals out there, attainable housing, slash some of these permit times in half at least. We also need to have some recalibration and trimming of the development charges. Up to 15% would be ideal on family projects, making townhouses, mid-rises more viable. Those are the homes that people want to live in. We don't all need the detached home. It's great, but we all don't want these condos either. Developers need to have a strategy shift. Developers are pivoting from big towers to communities, and that's where I think they can push some of their product. Ultimately, we need to sell what people want, and people don't want condos right now, especially the poorly built ones that they seem to be spitting out there with the layouts that we can all laugh at every single time we see them. For these type of things, you want to keep an eye on the financial budgets for the province this fall. If you see line items chipping away at real estate fees, new incentives for construction, this could be a turning point where we see some progress in those areas, which is what we're really looking for. Now, we've covered a lot in this video, of course. There's been a ton of different things. Human example, some data, looking across the country of how bad things have actually gotten in terms of new construction, potential job losses here, but it might leave you with a lot more questions. And if you have any of those questions, you can drop them in the comment section down below. If you're working in one of these industries, I want to know what you're hearing on that ground level. Are there certain things in your industry that you're hearing? Maybe you are working construction and you're focusing on that new development side of things. I want to know what you're hearing. Are you hearing that projects are moving faster than before? Or are you hearing that you guys should be more worried than you even thought?